Hello and good afternoon. My name is Catherine Edwards, and I'm from the RAND Corporation, where I'm an associate economist, and I am going to kick off our last session of the day. I hope that you've all made it this far, but I equally hope that you didn't wait to join until now, and so we can get your full time and energy. We are going to talk about a reimagining social insurance system. But before that, I'm going to hand it over to Bill Spriggs, who's going to talk about the Social Insurance Appreciation Hour right after this.
Hi, I'm Bill Spriggs. I'm the chief economist at the AFL-CIO and professor at Howard University. At 5 p.m. Eastern Time today, we have a Social Insurance Appreciation Hour. If you've already purchased a ticket or sponsorship for the Full Ball Award campaign, you've received the link for this social hour. We're down to the wire, but it's not too late to make a donation to get the special Zoom link for this. Every dollar helps. If you're unable to purchase a ticket or a sponsorship today, a contribution of any amount is welcome. There is a link in the chat box. After you make a donation, you will receive an email with the Zoom link for 5 p.m. I'm co-hosting one of the breakout rooms with Jacob Hacker, so I hope to see you there. Thank you for your support. Back to you, Catherine.
Thanks, Bill. So for the last hour of the day, we've talked, there have been a lot of great topics and a lot of great sessions that have talked about, various aspects of social insurance programs and economic insecurity. For this last reimagining program, we really want to get creative. And so we have dealt with, in the past months, the type of, catastrophic economic and social consequences that we didn't really envision even at the start of the year. That's on top of large scale societal shifts over the past 1 to 3 decades, over a different reward system in the economy, over rising inequality. And so when we talk about social insurance, we're often discussing the framework of the current system that exists. But in this last hour, we're hoping to talk about how to reimagine that current system for the future. And when I think about this question, I really think about the fact that I have a 6-month-old son who I assure you will all hear over the course of the next hour because he cries all the time. I'm far away as I can be, but you're going to hear him. But I'm thinking about when he starts working in 2036, or when he gets to be my age in 2055, or maybe around the time in 2090 when he could be retiring. What is the social insurance system that I should have for him, and how will it meet the economic challenges that he'll face over his life? So I encourage you to go into the chat feature on Zoom, the all group chat, and send in questions that you have about vulnerable populations, about the current system today, to say, how do we cover undocumented immigrants that arrive in 2040? What should the role of social insurance be in, say, access to different health benefits when you're retired? What should the role of social insurance be? Oh, we already did that one. Get creative, ask us hard ones. I think it's very good to try and stump us, but we'll try to do our best to talk about how social insurance can answer that. So please, by all means, use the chat feature. We have 4 presenters on this panel: myself, Bob Posen, Bill Spriggs, and Jeff Cruz. I'll let them themselves, starting right now with Bob. Go on ahead. Oh, but Bob, unmute yourself. Yes.
Okay. I'm teaching now at MIT Sloan, and I formerly was president of Fidelity Investments, and I've been involved with Social Security for many years. Today, I was going to talk about a contest that the Academy had for new ideas on helping the most vulnerable improve their retirement situation. This contest led to some really good ideas for the most vulnerable, and we focused on low-income workers who either did not have any retirement plan at work, or who were, because of their low income, pressured to claim early in Social Security. So I'm just going to outline these 2 proposals. I don't know whether we have any slides. Is Megan going to put up the slides now. So these are both what I call low-cost, high-impact reforms. So they don't cost a lot of money in the scheme of things, and they have a big impact. So the first one is what is sometimes called the automatic IRA with a Roth structure. So this addresses the problem that we have 60 or 70 million workers in the United States who have no retirement plan.
I'm done. What do you need?
And these workers would be helped if we had a requirement that most employers connect their payrolls to the federal thrift savings plan. The employers would not be required to make a contribution. They would not be fiduciaries. They would really play an administrative role. The employees would be automatically enrolled in this plan at some reasonable level, but they would have the ability to opt out if they chose. This whole proposal is based on the insights of behavioral economics, which would allow, which would take advantage of the fact that a lot of people say they want to join retirement plans but don't get around to doing it. If only a third of the employees actually who are automatically enrolled stayed enrolled, that would be an increase in 20 million people who were in some sort of defined contribution plan. Let's look at the next slide. Next slide, please. So the second problem that was addressed in one of these proposals is early claiming. Something like a third of all Social Security participants claim before normal retirement age, and they get a lot less per year than if they claim later. So these proposals address the question of how can we encourage Social Security participants to claim later. And most of the time they're claiming early because they need some money between the time they're 62 and 66 or 67. These aren't high-income people. So here's a little example to give you a sense of what we're talking about. If somebody who made $77,000 in annual earnings claimed at age 62, they would get roughly $18,000 a year. If they waited to 66, then it would be $24,000 a year. So let's assume that they need some income between 62 and 66 because they're engaged in part-time work, but that doesn't give them enough to live on. So they need $8,400 more. So one possibility would be a bridge annuity. A bridge annuity would be essentially an annuity that they would be paid every month for these 4 years between 62 and 66. That the financing source of that bridge annuity could be from their 401k plan if they had it, or it could be from the federal government if there was legislation supporting it, and then they would get their full Social Security benefit at 66. Alternatively, another proposal was saying, why do we need to have an all or nothing decision at 62? Why don't we allow people to claim partial Social Security benefits? And then if they did this, they at age 62, let's say to get enough benefits to get $8,400 per year, then they would obviously get less when they were at age 66, let's say $22,000 a year. So the combination of these two proposals really, I think, gives us a chance to think broadly about how we might be able to increase the retirement coverage for low-income Americans and do it in a way that might, and I use the word precisely, might be attractive to Congress because these are not very expensive proposals. One would increase the participation in DC plans, the auto IRA, and if we use the Roth structure, would have a very low cost. The other one would encourage people to delay claiming, and in the case of partial Social Security benefits, could be actuarially neutral, and in the bridge annuity, if it was financed out of 401k sources, would also be at minimal cost. So I really think that the Academy succeeded in getting these new ideas and getting a chance to have people really think through them, and hopefully now they'll get some more public support. Thanks very much.
Okay, thank you for that, Bob. And remember, if you have questions about any of the proposals or policies that we discuss, be sure to either send them to me or send them to everyone in the chat, and we'll get to them. So I have some brief words to say in terms of reimagining social insurance as PI of the Economic Security Study Panel that's being hosted by the Academy. The purpose, or the research question that the panel will be looking at is, I think in some levels is there a role for social insurance when it comes to universal basic income? If universal basic income is the goal, do we have to get there through an income tax finance redistribution system, or are there other options? Are there other means of ensuring and assuring income for all Americans? We have a very esteemed panel, many of whom are on the call. I believe I had one slide that was just the name of the panel members, but not a big deal. We've had several announcements about who they are and what their qualifications are. But the way that we've approached this is that we've tried to think about individuals over the course of their over the course of their life. So from their early life when they're not expected to be working to the middle of their life when they're expected to be working and garnering their own income, to later in life when they're not expected to be working but are expected to be garnering their own income. And if you think about life divided into those three categories, we basically look at where there are cracks and how to fill them. So if the safety net in the US is a quilt that has patches missing, how would we bring them together, and what are the ways to do that? We've had a lot of interesting discussion. We've met several times. I didn't quite feel comfortable enough putting up the policies that we're working towards right now, only because we haven't decided on them definitely, and I wouldn't want to kind of jump the gun on having the panel members' contributions. And so you just get the power of my words explaining that we're looking at difficult questions. But I think as far as how to reimagine social insurance, one of the central challenges that we're looking at is how do we think about these problems in the next 30 years, in the next 50 years, and in the next 100 years. Don't worry that you will have a very long report that will summarize everything that we found, in addition to many derivative products to leave behind. But I think what we'll mainly be presenting is, and what we've discussed so far is, there's something very attractive about universal basic income. Just give everybody a benefit. That way everyone gets it, and we don't have these problems like we've heard discussed in the past panel of some people losing access to benefits and coverage and need as they make small incremental increases in their working income. And so we talk about where that kind of simplicity really succeeds in the American economic context, and where it fails. And I'm happy to talk more about this. I look forward to publicizing and publishing the report for all of you and the panel's findings. We've discussed a lot of interesting proposals and interesting policies. So that's me from the Economic Security Study Panel. The next presenter is Bill Spriggs. And Bill, I'll hand it over to you.
Thank you, Catherine. I think we need to think about what has changed since 1983. And there are several things that have changed that we didn't anticipate at the time of, in many people's view, fixing Social Security. And I think that's the first thing we have to change. For the 50-year history up to 1983, we constantly revised Social Security to meet the needs of the nation as they unfolded and we understood them. We added disability benefits. We expanded the survivor benefits. we came up with bringing back in people who have been excluded. All of these changes, reimagining the benefit to make sure it was insured against inflation. All of these were a evolutionary process. Since then, the nation has become significantly more wealthy, which means you actually have more to insure when you think about what we're doing. And so we actually need more insurance. And I think the period we're living through now indicates how deeply America does not have the insurance it needs for a stable economy. There are two components to this increased change. One is increased inequality. I'm going to talk very briefly about one dimension of it. I have several slides. I'm going to show just a few of them, but please, you can ask the Academy, they have the rest of them. One of them was we didn't deeply appreciate in 1983, as we should have, the racial wealth gap, how big it was, and how permanent it was. Since 1983, you can see in 1983 that vertical line shows for Black families and for Hispanic families that the Black families were about 8 times less wealthy than the white families. Hispanic families were about 11 times less wealthy. Over the period, this has expanded. Next slide. And it is intractable. In 1983, many people thought that the wealth gap was simply a matter of differences in education and opportunity. We now have a deeper set of appreciations that those will not solve, those typical programs will not solve the wealth gap. The wealth for a Black family headed by a college educated worker is actually less than the net wealth for a white family with less than high school. This is a deep, intractable problem. Next slide. And of course, it's related to how much money people make over their lifetime. Discrimination is very powerful in explaining that. Next slide. You can try and model the intergenerational mobility we've been able to see. And you can see that if you look at the mobility for Black families compared to white families, these two don't intersect. And that means in the steady state, the line that's the one that's the diagonal going out from the origin, in the steady state, you can see that Black families and white families end up at different points. Next slide. This shows the permanent steady state. And in other words, we're pretty close to the best we're going to do. And as you can see, African Americans and Native Americans will not have the wealth of white Americans unless we do something drastically different. Hispanic Americans, you see, are there in the middle, still below. Now, that would be one problem, but given that we're about to become a country very soon, in which the majority of people are Hispanic, Native American, Black American, that is going to be a problem to have a nation in which we have these huge and permanent wealth gaps. And it has a lot to do with the resiliency of individual households and the resiliency of our economy. The weighted average of the components that make up the source of these inequalities will be the weighted average of overall inequality, which will be intolerable for maintaining a stable economy without thinking through a social insurance system that can recalibrate, knowing the risk that so many households are going to face. That's a huge challenge going forward. We also didn't know about global warming in the way it would manifest itself so quickly in our economy and the way in which whole communities could be affected and could lose vital resources. And we didn't understand that in economic downturns, similar things could happen. So not only do we have a more fragile society when it comes to individual resiliency, but our communities are not as resilient as they once were and face new threats. We need to re-envision Social Security, not just to protect fragile households, but fragile communities. And so I hope that we can have people put on their thinking caps and imagine some different ways that we could do this. One source of wealth inequality are huge gaps in home ownership, much lower home ownership for Black and Hispanic families. And yet we have so much social policy that ensures home ownership. And so we socialize a lot of the risk, but we privatize the gain. We need to imagine, how can we socialize the gain from home ownership? Can we take Fannie Mae and Freddie Mac, which have been floating out there, and give them to Social Security as an asset? Going forward, we're going to need to think about what's in the asset base for Social Security. By making the returns to home ownership part of that social fabric is one way to begin to think about how can you get social benefits from something so far we've made so private. We're going to have other means to stabilize households in a world of high income inequality. Social Security will be more important because people are living more fragile lives, as we see from the need for renters' help, for homeowners' help during this economic downturn. We'll have to take those much more seriously. I hand it over to Jeff.
Sure. Thank you, Bill, and thank you, Nancy, for having me here today. This panel builds on the Academy's virtual roundtable series, which focuses on the need for social insurance to address challenges facing vulnerable groups, including those with disabilities, low-income workers, people of color, gig workers, and so forth. And so I'm pleased to participate in this. I'm a senior policy advisor on the Senate Budget Committee, for those that don't know me. I'm going to focus on the Latino community today. Latinos make up about 18% of the population, nearly 1 out of 5 Americans, and it's a rapidly growing population. By 2050, 1 out of every 4 Americans is expected to be of Latino descent. But I want to be crystal clear too. The strength of social insurance and Social Security is that it's not there just for Latinos or any one group. It's a universal program that's there for everyone. And Americans of all backgrounds, all ethnicities, all religions, and even across ideology and parties at the grassroots level, rely on and support programs like Social Security. It's the most successful children's anti-poverty program and the bedrock of our retirement security system. But the program really needs to be strengthened and expanded. First, benefits are inadequate. Our disability program is one of the most restrictive and stingiest among all of the industrialized nations of the OECD. Similarly, retirement benefits replace less than 40% of a worker's income. This is far below the 53% average of developed countries. In America, the average benefit is only $1,465 a month for retirement, with the majority of seniors relying on this for the majority of their income. But benefits are much lower and also much more important for the Latino community. The average benefit for a Latino male senior over the age of 65 is just $1,200 a month. And for Latino women seniors, the benefit is less than $1,000 a month. And 40% of married Latinos, 61% of single Latino seniors rely on this for all their income, more than 90% of their income. And so that's extremely important. Senator Sanders, my boss, has introduced the Expand Social Security Act to increase benefits across the board for every single beneficiary. We feel that it's unacceptable in one of the wealthiest countries in the history of the world that we have more than 7 million seniors living in poverty today. So expanding benefits to us is one of the crucial things we need to do to this program. In addition to the challenge of inadequate benefits, Social Security also faces severe fiscal challenges caused largely by rising income inequality. And Bill touched on in 1983 when they last reformed it. They kind of predicted the changing of the composition of the workforce. They were pretty accurate on the rising life expectancy, what no one predicted then was that nearly every penny of economic growth for 3 decades would go to those at the very top, the wealthiest 1%. Today, that means more and more income is above the earnings cap, which is $137,700. In 1983, they wanted to capture 90% of all earnings. Today, because of rising income inequality, we only capture about 83% of all earnings, and that number is projected to continue to decline over the next few years. Now, only 6.2% of workers make more than the current cap. My boss's proposal would increase subject income above $250,000 to Social Security, and only 1.8%, less than 2% of Americans make more than $250,000. Those folks are overwhelmingly white. Less than 5% out of the people that make more than $250,000. Less than 5% of those are Latinos, who, remember, make up 18% of the population. Less than 4% of those making over $250,000 are African American, who make up about 13% of the population. But this growing inequality of earnings is really only the tip of the iceberg. It's only a small part of the story, because an increasingly important source of wealth for the wealthiest Americans comes from inheritance and from capital gains, which are excluded from Social Security altogether. And so, it's really simple. We can't afford the even current inadequate levels of benefits if we're going to exclude the wealthiest quarter of our economy from contributing into the program. So Senator Sanders' bill would subject both earned and unearned income and capital gains above $250,000 to Social Security taxes. And if we do that, we can make Social Security solvent for decades longer, while increasing benefits for everyone, and especially for those that need it. There's several other ways we would improve Social Security in the bill. It would increase the COLA, the cost of living adjustment, and the special minimum benefit, and it would restore a benefit for college or vocational school students of deceased or disabled parents up to the age of 22. It's also important to note, especially talking about the Latino community, undocumented workers pay billions, between 12 and 13 billion, into Social Security each and every year without being to claim benefits. We need to do comprehensive immigration reform, and that should include a path for these workers to get credit for all these contributions they've made. Finally, I just want to touch base. There's a lot of other reforms to Social Security we support that aren't in the bill. Senator Chris Murphy from Connecticut has an excellent proposal that would give caregiver credits for caregiving for those who sacrifice their work to care for a loved one. Senator Gillibrand has a Family Act that creates a mechanism very similar to Social Security that would provide universal paid leave for workers without putting the entire burden on the individual company they work for. These proposals are widely supported by the American public. 2018 polling found that 2/3, 66% of likely voters would be more likely to support a candidate who wanted to expand benefits. Less than 20% would oppose that. And so, we feel that it's time to get this done and have a real serious conversation about expanding benefits. And I'm happy to go into any of this in more detail in the Q&A. So thank you, guys.
Okay, great. So we have about 20 minutes before we were going to wrap up the session. And this is really a chance for us to think creatively. I kind of think of this in my mind as, can social insurance fix that? So I'm going to bring up a problem that might be out of the purview of current social insurance programs, and I'd like to hear from the panel. Of course, that does include myself, so this is a bit self-serving, but I won't let myself answer first, if that kind of assuages people's concerns. But I'm going to bring up some societal problems, some economic issues, and then let's think of, can social insurance fix that? Thinking about current programs if they were expanded, or new programs that need to be added. So can social insurance fix that? We'll talk to everybody, but let's start with, we're in the middle of a pandemic, and we have seen staggering death rates as a result of it. But unfortunately, those death rates are not distributed across demographic groups equally, and Black individuals and Hispanic individuals have been dying at higher rates. So can social insurance fix that? Can social insurance help that? Panel, what do you think? Jeff, you just talked, so we're going to go right back to you.
Sure. For Latinos, the life expectancy is actually a little bit longer than other groups, which makes Social Security even more important for them. Certainly, when you look at income, and a lot of the data I've seen shows that life expectancy is correlated to wealth. Here in DC, if you live in the ward by Georgetown, you're going to live an average of 20 years longer than if you're in Ward 7 or 8 in Anacostia. And so, you see everywhere that, the more wealth the community has, the more life expectancy tends to increase. And so, if you have seniors who are at poverty, below poverty, or just barely above, if we could increase benefits, I think we will help a lot of people live longer.
Okay. Bill, you were next. Differing health impacts and death rates of the current pandemic. Can a new or expanded social insurance program, would it help with that?
Well, I think it would. The incident of the disease in terms of who gets hospitalized shows that it really is a disease very much of working people. For both the Black and the Hispanic population, the majority of people who get hospitalized are working age. For Hispanics, it's even more extreme. It's between the ages of 18 and 40 is over half of them. For Blacks, it's not quite that high for those 18 to 40, but you add in the next up age group, and that brings in over a half. For whites, it's 65% of those who are hospitalized are over age 65. So a lot of the disparate death rate comes from the fact that Blacks and Hispanics are getting it as workers, as we've seen the spikes in soar across the country. We see the age is coming down for those who are being hospitalized because we're opening up and more workers are out and catching the disease. But when you look at death, as opposed to just getting the disease, so part of it is we don't have adequate protection for workers, but Blacks are very old who are dying, and this gets to some inequities when you look at health, at where older people are living, and you look at the life of those who are more dependent only on Social Security and the type of housing arrangements they face and the type of elder care that they are looking at. So I think a Social Security that acknowledged these wealth gaps so that we acknowledge that there are groups that are left behind. And as my slides indicate, Social Security is part of the problem. When Blacks were excluded by being agricultural and domestic workers disproportionately at the beginning of the program, that cost hundreds of billions of dollars in wealth to the Black community. And some of that was the animus of the South, for sure, but a lot of it had to do with the economist of the day who came up with these programs had some of the most backward views on race because they were the brains behind the eugenics movement, and they actually thought that helping the poor of certain races was a bad thing. So there's some blame here that we have to acknowledge in how we constructed the program that contributes to part of the wealth gap that we're observing. And so we can think through how do you justify fixing Social Security to acknowledge that people are going in with these wealth differences. And that's why I brought up the issue of homeownership and trying to figure out ways that we could change the asset base of Social Security so that when we expand it, we could think about how we could expand it to help those who weren't homeowners so that their benefit levels could be enhanced.
Hey, if I could expand on my previous answer too, I want to bring up one important thing we need to do is improve the administration of Social Security disability program. People wait an average of a year and a half, 2 years to get a decision. And we see thousands of Americans die while waiting for benefits. If you're wealthy, waiting a year for benefits is fine. You have savings to hold you over until you get that. But for low income people, that wait is literally killing thousands of Americans. And we've been working with Representative Larson on the House side, John Larson, who's the big champion for Social Security and the chairman of the Social Security Subcommittee for Ways and Means. And so we will be talking about that. We have a report coming out on this in the coming months, and we've been making a big effort to improve the administrative funding. And that's one simple thing that we could do that would save thousands of low-income Americans' lives, no doubt about it. So I wanted to be sure to bring that up as well.
Sure. So, Bob, the disparate impacts of COVID-19 on
so I had there are two things I've thought about. One is, as I think Jeff mentioned, the difference in life expectancy between the lower half earners and the higher half earners is very substantial. Maybe not as big as Georgetown, but 4 or 5 years. And so I think we need to change our thinking about whether Social Security is progressive by looking at what I call lifetime benefits, which is the benefits you get relative to including the number of years you're likely to get them. And if we do that, I think you would see that Social Security isn't progressive at all now. It's probably roughly neutral. And my view is that we ought to change the schedule to basically increase the benefits of lower earners. But I'm not sure we can afford to increase the benefit of all earners. So I tend to be a little more fiscally disciplined than other people. But I think that's if we don't recognize that difference in lifetime benefits, we're really kidding ourselves. So those the lower half earners have much lower life expectancy, and those are the people who are not in 401k plans, they're not in DB plans. So they're getting much lower levels of subsidy and federal monies when you think about it. So I'm in favor of trying to make this system again progressive by increasing the benefits of the lower half. The second thing I want to mention, which goes to healthcare, is I did a research project on, there were 7 states that had state reinsurance funds. And what those are is basically ways to have the state share some of the cost of the high cost claim. And when you think about the ACA and the exchanges, one of the big pressures on rates is the fact that you have this tail, which is very hard to predict. And I would think that given COVID-19, that insurers are even going to be more concerned about what's happening to that tail. And that what happened in those 7 states where the state reimbursed high cost claims, and the amount of reimbursement was varied between 40 and 80%. The amount, some of them started at 50,000 a year, some of them started at 100,000. But what was remarkable was that when the states agreed to subsidize that tail, there was a dramatic decrease in the rates, not only on the ACA exchanges, but across the whole health policy, between health policies across the board. And the interesting thing about that is that the federal government's subsidy to the ACA exchanges went down because the policy costs went down, and the federal government then transferred to the states the amount of that reduction. So that helped the states a lot pay for that reinsurance program. So I think that's something that's going to become hopefully more prevalent. As I said, we have 7 states that did it, and I think a few more have signed up for it. And I'm concerned that the tail, the health insurers, can be so scared by the tail and the cost of the tail that might impact lots of health insurance programs. And this is a way to start to deal with it.
Thanks, Bob.
I think
oh yeah, go ahead.
the
Sorry, Bill.
raising the issue of health insurance was important because the tying of health insurance to work has been amplified during this downturn. The large number of workers have lost access to health insurance. So I think this has highlighted a number of problems that we face because of the way we've structured health insurance, and that is an important component of social insurance. I would just add real quickly, we set the death benefit for Social Security back when funerals weren't very costly. That's a benefit we've never adjusted. And yet, this is a tremendous burden on a number of low income families when they lose someone, that the death benefit no longer has any relationship to the cost of burial. It's an important component that needs to be revised and modernized.
But just following up on what Bill says, now the ACA is the only way that lots of these people who lost their jobs can get health insurance at a reasonable price. And so if we don't know what the next round's going to be, but if the health insurers get really scared that there are going to be these terrible cases with ventilators are going to cost 300,000, 500,000, and that causes them to raise rates across the board, that will be a real big problem for all of these people who no longer have health insurance at work.
So what I've heard from the three of y'all is, one thing that social insurance can do for these very acute problems is leave us with a better playing field when some crisis like this hits. If we had, less disparity in life expectancy, less disparity in access to health insurance, things that social insurance can help with, right? These structural changes can make an impact of something like a pandemic easier to bear, right? If we all had access to sick leave and paid family leave, and we did not have the wealth gap, and we worked harder to fix that. I would add this is again me responding to my own question, but I would add to this, if we had a workers' compensation program that was harmonized with sick leave, we would not have to see so many people getting sick on the job in order to maintain wages for their family. I mean, we're coming to a crossroads where millions of workers who are on unemployment insurance are going to be recalled back to work, and if they don't feel safe, they lose their job and their benefits. And I think that that's that is not the equilibrium that we are searching for, as we would sometimes say in economics, because this is now just pushing people farther into the brink of vulnerability because they don't want to put their health at risk. And so a social insurance program that was revitalized to take into account short-term risk and long-term risk of health so that we don't have them combined in the same place, I think that could be a way that social insurance could really fix, even in the immediate term, the type of disparities that we're seeing now. So that was the first can social insurance fix that, and I'm going to stay on a similar theme while we have a few minutes left, and that is we have seen incredible protests and a sea change in opinion about structural racism in the United States, and the idea that probably many people on the call, including one of the panelists for sure, has been trumpeting for a long time, which is that there is structural and systemic racism that is holding back the economic success of Black families, Black households, and Black workers. So, can social insurance fix that? I'd like to, if we could, have the panelists talk about things that maybe wouldn't necessarily be related. We have issues with policing. We have issues where schools remain de facto segregated. And we have Black students and white students who have maybe never seen each other until they go to college, and maybe there's only a small share. So how do we think about social insurance in a world that is actively addressing systemic racism, is actively trying to integrate schools, and is actively trying to help the Black-white wealth gap? So Bill, since I know that this is your area of expertise, I'm going to have you go last. Just kidding, I'm going to have you go first. I think it's probably best that you go first and we all build off of what you say.
Oh, I thought it was appropriate for me to go last, but I mean, this is the difference between equity and equality. And the program has improved tremendously over its evolution so that on issues of vertical equity, it has become far better. We need to raise the cap on the tax that support Social Security, precisely for the reasons that Bob raised. We now know that the longevity of people is correlated with their income, and you need to think about high income people are getting benefits longer. The reason for the cap has gone away. So I think we've achieved that vertical equality, but equity in this situation is difficult for a social insurance program to address. Uh, we have to think about the dimensions of the program. I tend not to like tests to be eligible for benefits, but there's a reality that we cannot close the wealth gap without either having reparations or thinking through how these programs have to then make up for this permanent wealth gap. And um, and so I don't know whether I'm in favor of it, but one has to consider that if you retire on Social Security and you don't own a home, you're at a huge disadvantage compared to someone who does own a home. And so you could think of a test to try and capture how can we adjust benefits that are progressive not only in the income dimension but in the wealth dimension, and that's a way to keep it universal while recognizing that these wealth gaps are huge. And again, the importance is the achievement of social insurance is that when we continually evolved it, we were able to maintain a stable economy. When we let income inequality take off, the ability of individual households to be resilient has gone away. And we have too many households in the United States that simply cannot absorb economic shocks. Our system does not work when you have that many vulnerable households. Social insurance isn't just about the individuals and individual equity, but it's about what does it take to maintain an economy. And when too large a share of people don't have what it takes, the entire economy suffers.
So thanks so much for that, Bill. So Bob and Jeff, I realize what I'm about to say sounds a little ridiculous, but in about a minute or less, can you talk about the role of social insurance in structural racism today? And remember, this should be solvable in about a minute. So that's about all the time. That's about all the time you get. But Bob, let's go to you. I mean, your policy.
Yeah,
your policy was all about wealth building and asset saving for retirement. How can you see structural racism addressed through social insurance programs?
Well, I think the reality is we're going to have to go outside of social insurance programs to really address those. I still have some faith in educational programs, even despite Bill's statistics. But I think we need to think about different sort of educational institutions. In Massachusetts, I've been very impressed by the success of regional uh, uh, vocational technology high schools, and they've been hugely successful here. And the beauty of these are two things. One is they're regional, so they tend not to get caught up in residential segregation because they cover a broad area. And second of all, they're highly sought after because they're training people for jobs in technology of various sorts, people who wouldn't necessarily be going to, study in a liberal arts school. So that's, if you look at that in Massachusetts, it's been very successful on a number of counts in getting people from a broad array of income groups, including African Americans, good jobs. Obviously, could be better, could be broader, but I don't know whether it's reasonable to try to ask social insurance to carry all the load in this debate.
Yeah.
Okay, and Jeff, I will say I would want to recognize that in the current climate we've been talking, the focus has so much been on the situation of Black Americans, and then it's been and also Hispanics and immigrants, and so it's been, I know that in the current coverage it's been more of an afterthought, but it's still a central problem for immigrant communities and for people of Latino descent. I just want to make sure I recognize that in the reference to the question.
Sure, yeah, and the focus has correctly been on African Americans in the media, but Latinos largely face many of the same challenges, and so the solutions are applicable for both groups 99% of the time. I will say social insurance. It's obviously not going to, cure racism by itself. I would never make that claim, but I do feel that social insurance is a crucial component to reducing inequality and getting to a more equitable place. I mean, I absolutely think it's key, and in large part because of its university, that it's universal, that everyone, for example, gets Social Security. If you look at our 401k system and our pension system, we spend 120 billion a year promoting 401ks and private pensions, and that largely goes to those at the very top. Most Latinos don't even have access to a 401k. And if you do, it's hard to save. You don't, if you're in the highest tax bracket, you get a much higher tax deduction and benefit from saving. If you're in a low income bracket, you're going to get a lot less. So when you look at the 401k system, it is just overly goes to higher income folks and not a whole lot of minorities. Similarly with healthcare, you see Latinos just have a much higher rate of not having healthcare when it's through your employer. And so we need a universal program that covers everyone. And then, I just want to touch on too, part of it is just having a focus and wanting to cover Latino and African American workers. When Social Security was created, agriculture and domestic workers were excluded. And even today, they're not under the FLSA, the Fair Labor Standards Act. They're exempted from that. And you've also seen a huge decline in unions, that unions have just been under attack. And they've done legislation after legislation to make it harder to form a union. And that has long-term impacts because you don't have the workers organized to fight for social insurance programs like healthcare, like a strong Social Security, and to get more benefits. Unions has been proven time and time again to reduce inequality of wages. So I think that's another kind of crucial component. But certainly, that a lot needs to be done outside. I'm not going to cover ending racism in 1 minute. So that's
yeah. So,
but a lot more in addition to that.
Yeah. So we have to end, and I'm going to hand it back over to Bill Spriggs, who's going to take us into the Social Insurance Appreciation Hour. My final thoughts, kind of as the prompter of these two questions, would be that the title of this session was about reimagining social insurance, but I think maybe one way we should think about it is reimagining the risk that social insurance covers. Right? Social insurance, broad base, everyone pays in, everyone gets out. I don't really think that needs a whole lot of workshopping. What needs workshopping are the risks that are brought under the umbrella and making sure that everyone gets to benefit from them. And with that, I want to thank Bob, thank Jeff, thank Bill, and Bill, back to you.
Thank you, Catherine. So we do need to start wrapping up. And before we go, I want to quickly remind folks about donating. Why make a donation to support the Academy's work? Well, for starters, you've probably heard about this terrific report on universal family care the Academy issued last year. Catherine was one on that study panel also. The report is designed to help state policymakers interested in addressing the problems that caregivers of all ages face, which has been compounded by the pandemic. The Academy has taken the findings directly to each state, especially now that more policymakers are seeing the urgent need. On July 14th, the Academy is having a forum specifically for policymakers in Minnesota. More info will be available on the website soon. There's also forums for policymakers in California, Michigan, and Illinois later this summer and fall. This work is generously funded by the Ford Foundation. The Academy wants to take the report to many more states too. Contact Bill Arnone if you want the Academy to come to your state. Thank you to those who have contributed already. Our goal is to raise $100,000 by June 30th. And today, you're putting us much closer to that goal. I'm happy to announce that thanks to your support, we've topped $80,000. Thanks to Cecilia Conrad, Jerry Mashal, and Paul Vanderwater for your contributions. Many thanks again to the lead sponsors, AARP, Anthem, and the Peterson Foundation. Thank you also to BCBSA, the Buffin Foundation, the Commonwealth Fund, and the Siegel Group. Jeff?
Yeah, thank you, Bill. And if I could add just to what you said, 10 years ago, they had the Simpson-Bowles Commission and the Super Commission that was threatening to cut Social Security. And I was starting a coalition of Latino groups, Latinos for a Secure Retirement, because I wanted to be sure that the Latino community had a voice in that debate, in that discussion. And we actually won a grant from the Ford Foundation that was administered by the Academy. And that was really, really crucial to helping get the organization off the ground. And today it is going super strong. It's actually gotten a lot better since I left, which I probably shouldn't say out loud. But yeah, it's going really strong under the new leadership. And so, the work of NASI was really critical to that. And so I just want to, personally give thanks to the Academy for that, even though that was 10 years ago. And I hope people do work with them to keep programs like that going. And then I think I'm supposed to give the shout out for the social hour. People should have the Zoom link in the inbox. And so I hope people could join the social hour, which is going to be immediately following this. So thank you, guys.